Hey everyone, it's Martha Cherian. Listen, I hope everyone's doing really, really well today. It's Monday and it's a great start of the week. Um, so I guess you're a little curious, I hope, why gold prices are expected to go up to $18 to $3,000 in the future, and basically what does that mean for you? So that's what I wanted to talk to you about today. Hey Paul, thanks for joining me. So I have my little cards here because it's like a house of cards. Okay, so I have a bunch of stuff written on the cards that I wanted to show you and talk about with you because it's really important. But just to give you a little bit of a, oops, okay, just to give you a little bit of, um, I want to just get a little disclaimer here. I'm not a financial advisor in any way, but I read a lot on the economy, finances, I watch a lot of videos. I'm kind of immersed in it because back in 2008, Abe and I, we were making a lot of money, but we didn't save it in the right form. So what happened was we lost a lot in the 2008 meltdown, and we both said that that's never going to happen again. So we kind of stuck with that, and that's why I wanted to do this, and I want to help other people. So life is all about education. Hey, John. So that's what I wanted to talk to you about today. So the U.S. economy, okay? Most people, I guess, on my page are in the U.S. economy. And you always hear, and I get so aggravated when I hear this because it's not that I don't want it to be true, it's I know it's not true. You hear the economy is really strong, blah, blah, blah. But they never talk about the underlying things in the economy. And that's what I have an issue with, okay? I'm not here to fan myself. Well, that's cute. Somebody just asked me something and I thought that was funny. So we have a lot of issues, okay, in our economy. So it's like a cards, like a house of cards, not the TV show, but a house of cards. And the thing is, in 2008, what really brought down or collapsed our economy, or almost, it came pretty close, and I'll explain why it didn't completely collapse, but it went global, and that was because it was just one bubble, right? You heard bubble, the word bubble. It's one bubble that burst, which was the real estate market, okay? But now we have more than one bubble, and it's been building for over 10 years. So if you remember, in 2008, we had quantitative, or was it 2009 it started, the quantitative easing, Q1, Q2, Q3. I don't know if we had a fourth. I have to actually check that. But what that basically meant was that they were printing, hey, Stefan, they were printing a lot of money, okay? That's what that meant. The government, the US government just started printing money, okay? Now, so it was just real estate back then. Now, the problem is that we have a lot of other bubbles. So I want to just go through it with you real quick and then go over other things too. So we have real estate, and then we have commercial real estate, okay? These kind of have slowed down. They're still a bubble. It's probably not as big as it was, but they're a bubble, okay? And they've slowed down quite a bit, okay? Basically what's happening with real estate is that in certain markets, the prices are so high now that people are just getting priced out. So people are deciding to just stay in their homes. So there's like there's a lot of properties on the market that nobody can afford. So it is a bubble, but it's not like that. But we don't have to worry about that because we have several other bubbles, like the student loan bubble, okay? $1.6 trillion in student loan. So when I hear politicians say, well, we're gonna wipe that out, okay, I'm thinking, okay, that would be nice, right? It would be nice to just wipe out the debt of the student loans. But the problem is, who's going to pick up the slack for that? In the end, it's always the taxpayer, or they'll just print more money, right? Because now we took the gold standard off of the money in 1972. So, and none of them want to put it back on again. No politician wants to touch the gold standard because if they do, then they can't keep printing the money. So that's not going to happen anytime soon. So it's gone, right? Consumer debt, it's at its highest levels, okay, which is credit card, okay? So what that means is that basically consumers or people like us are just buying stuff, and it's basically we're keeping the economy going with our debt, right? But, you know, so they just lowered the interest rate. Big deal. It's like a 1/4%. So for credit card debt or other debt like car payments and all that, that's fine. It'll go down just a little bit, not a lot. But for the people that had money in the bank that were saving, not so good for them, because they were getting not much already, and now they're going to get a lot less because they lowered it. Now they want to lower it again because, you know, oh, the economy is so strong. If the economy was so strong, then they wouldn't even be an issue about raising the interest rates, because they know that it's so fragile. One little thing is going to throw it off. And I'm not laughing or smiling because I'm happy. I'm just thinking, what a deceptive thing to do to people. Then we got the trade wars, okay? All that means is it's costing us more money for the stuff we use, okay? Then you got the tariffs, same thing, more money for the stuff we use. It's not being put on anybody else. It's going on the people that are bringing it in and selling it to us, and they're just handing it over to us. So nobody's paying for this but us. We're paying for this, okay, the U.S. consumer. Now, this is a big thing, and I didn't know about this, and I read up on it, and I was like doing a lot of research. Now, in the bond market, they have the yield curve, okay? So that's like when you get a loan, okay, and the short term are more interest, but the long term, like 30 years, are always less interest. Now, when that gets inverted, okay, so it's called an inverted yield curve. That means it's going backwards. That means it's the opposite. The short term are paying less. The long term are paying more. Not a good sign of recession, inverted yield curve, okay? Retirement crisis. All the baby boomers, they're all coming home, so to say. They're all ready to retire, okay? That's a big thing. That's going to put a strain on our health care, which is already in a strain. So we don't have health care really here. We don't have anything. We're kind of screwed, actually. So that's a big problem, okay? Underfunded pensions, okay? You know what underfunded pensions mean? That means that firefighters, policemen, school teachers, all their pensions are in the stock market. They're underfunded, okay? Hedge fund managers love this stuff. They love IRAs and underfunded pensions. You want to know why? It's play money for them. So it's underfunded. So when these people go to retire, guess what? We have to pick up the tab, okay? It really shouldn't be a big deal, right? Because they did the job, firefighters, policemen, school teachers, right? They take care of our kids. But it's just the way everything's set up that's what's going to happen. Now, this is a big one. We have an overvalued stock market. That's why the economy is great, right? It's great for investors. It means nothing to people that are just like working. It doesn't mean anything. So we have an overvalued stock market. Not good. It's overvalued. We have an interconnected banking system. This means that it's global. That means if we have an issue here, it goes global. Not a good thing. Now, that happened in 2008. It's going to be far worse now, because now it's like everything is completely connected. 10 years makes it, actually it's 11 years. 11 years makes a big difference. And now we're even more connected. The banks are bigger. So, hey, okay. Bail-ins, okay, money. The banks need money. They're not getting enough money, so it's a bail-in. So they're going to use the deposits to fund their stuff. And when that's not enough, they're going to get a bailout from the government, okay? Remember, we bailed out the banks, and they're bigger than ever now, okay? Bigger than ever. They could do more damage. Okay, this is actually the thing that and you know what, guys, don't take my word for it. Please research this. But this is a huge thing, okay? Because when you, like a lot of, I don't really watch the news, but I mean, I look at the financial stuff. If it has to do with financial, I'll read about it, okay? And I drive Abe crazy because that's all I read. But the loss of the reserve currency status, that is a huge thing, because right now, the US dollar is the world reserve currency. That means that anything that's how they're able to put sanctions on other countries, okay? Because the dollar is the world currency, it's the reserve currency. That's how we're able to get things cheaper, because the dollar is the reserve currency. But there are other countries now that are kind of getting tired. They're feeling like the U.S. is a bully. There's something with financial, like when you transfer money, it's called the SWIFT. Like you've seen that if you want to do wire transfer. Well, a couple of other countries, Russia, China, are getting together, and they actually, and the European Union actually, they started a new SWIFT payment, and I forgot, it escaped me what they call it. So this is to go around the U.S.'s the SWIFT payment system. So they know about it. The U.S. government knows about it, and I think that's why they're kind of like, sanctioning all these countries. But other countries are really just getting tired of it. So if they decide that the US dollar is no longer the reserve currency, guess what? This is what's going to happen. We've printed all this money, right? Because it's used throughout the world. Slowly, it's all going to start coming back into the United States, into our economy. And what's going to happen is things are going to really start going up. Okay, this is where hyperinflation happens. So, I'm not doing this to scare you, but this is all stuff, like I said, research it. I mean, we look at Venezuela, right? Heavy sanctions by the U.S. People are starving. They're leaving there. And that's not helping. That's not helping their status there. It's not helping them to try to get ahead. Yes, it is bad management too, but the sanctions aren't helping it. And also people think, oh, that's Venezuela. That can't happen here. Well, how many countries did that happen to? It can happen, okay? It can happen anywhere. This is also another big one. The U.S. debt. It is $23 trillion plus. I lost track. Okay, how are we going to pay this off? And they just keep raising that debt ceiling. They have, and it's both parties, okay? They have no intention of paying off this debt. It's just going to go higher. So this is a big thing. Remember, all these things are the foundation of our economy, okay? It doesn't look good, okay? There's no real positive here. Stagnant wages, okay? Like you hear, oh, the unemployment. Okay, the unemployment is low. That's great, because people are working jobs. They're working 2 to 3 jobs just to make ends meet. It's called the working poor. Basically, they have just enough to cover everything. They don't have any extra money really, okay? Stagnant wages. For years this has been going on, okay? Corporate debt. Now, corporations are tied into the U.S. government, right? So if they really screw up, they're like the banks. They're just going to get a bailout. And who's going to pay for that? You and I, okay? Rich people don't have debt. They don't have debt, and they don't pay taxes because, well, that's a whole other video. But they're not going to pay the debt. You can try to tax them. You can tax them higher. They don't pay taxes because they know the loopholes. So that's stupid too. That's not going to happen. Now, this is the last thing, okay? Now, when you take all this, okay, now back in 2008, what happened was they combined all the bubbles of the real estate into what's called derivatives, okay? And then they took that, the stock guys took that and they sold it to other countries. So they basically sold our bad debt. What's happening though now is, all right, and that caused that collapse. You see these? These are all going into the derivatives. So all of this debt, all of this bad stuff is going in here, and they're going to start selling it, or they already have. So that's what I'm saying. The 2008 collapse was just something to let us know that it's not so safe. Be careful, because the next collapse is going to be far worse because we have all this. And that's a lot. That's a lot of debt there, just sitting there. You're looking at probably like $50–60 trillion of debt. There's no way we can pay it off. So what's the solution to this? Okay, the solution is central banks know it and governments know it. China, Russia, India, the United States, Germany, France, all these countries, right? What's their solution? They're buying gold. If central banks are buying gold, why aren't you buying gold? Okay, governments are buying gold. Why are they buying gold? Because they know that all of this is going to come home to roost eventually. So what happens in the United States is going to completely affect them, because it is a global, whether we like it or not, it is a global economy. It is a global economy. It has been for years. It's just more so now, and it's going to be even more so in the future. So what you need to do is you need to protect yourself. You need to take some of your currency that you have now, your paper money, okay, which we have a lot of, and you need to just transfer it and get real money, which is gold. So that's what I want to talk to you about. So Abe and I are into metals, okay? And the reason why we got into metals is because we lost a lot. See, you can't really You can talk about it, you can look back and say, oh my God, that was the worst thing. But unless you do something about it afterward, in other words, you learn from your mistakes, it's really stupid, because it's just going to happen again. So if we're counting on the government to, prop everything up, yeah, they're going to print more money. It's not going to work this time. There's too much debt. And then you have all these other factors. Now, I don't know if it's political. Well, some of it is political. Just the attitude of the government here. It's just pissing people off. So they're going to be like, all right, well, you know what? We don't want to use this. We're going to use something else. They're already buying oil and stuff from other countries with gold. They're not even using currency. So they're buying gold and they're finding a way to switch it back. So this is all happening now. This is all happening, and you don't hear about it on the regular mainstream media, but it is happening. So the best thing for you to do is to protect yourself with metals. You can buy small, and nobody's going to, if gold is already shooting up, so you can't buy well, some people can. If you wanted to, you could buy ounces or, kilos of it. But, to start off with, you can buy grams and it adds up. But you need to do something to protect yourself, because it really is important, because the people in 2008 that had metals, it saved their ass. I mean, yes, they had a little problem, but it wasn't like Abe and I had a really big issue. A lot of people, so many people lost everything because they really weren't prepared. They didn't have anything to back them up. So again, if the central banks are buying gold to protect the economy in their countries, why shouldn't you? So you have to look at yourself as your own little economy, and you need to take care of yourself and protect you and your family. So I see a lot of people on here, Cheryl, Chris, Byron, Stefan, Segar, I'm already married, Abe and Paul. I want to thank you all for watching this, but I really want you to have that sink in, you can watch this on a replay if you want. All of these things are going to affect the economy, and when it does, it's a matter of when. We don't know when, and nobody's hoping, because it's not a good thing, but it is going to happen. It is going to happen. There's going to be some kind of reset, because you just can't keep going with all this debt, and everything is not so transparent. So that's a whole other video, but you really got to protect yourself with gold. So we work with a company who does this, and I'm glad that we found the person that showed me the video. I'm so thankful that we found the video, we watched it, because it really opened our eyes, forced me to educate myself more on this, more than anything. And I'm going to put the link. If you go to our website, begingold.com, you'll know right away what it is. But it's a great company. And again, all you have to do is you open up a free account. You don't have to do anything else, but I'm just telling people, I want you to save in gold. And if you tell other people, the difference is if you tell other people the same thing that to save in gold, you can earn a commission just that way. All you have to do, again, you're not buying it. You're just taking some of your paper currency and you're turning it into real money, which is gold. That's all you have to do. So don't take my word for it. Do the research. It's out there. If you want, I can point you to some stuff to research. Look it up yourself. It's all on the up and up, all true. And that's it. I wanted to just, do this video today because I really feel like it's important, because gold is going up now. So what does that mean? When gold is going up, that means that the confidence in the dollar is going down. There's inflation happening. So gold all of a sudden just started, it's really rising a little bit quicker than it usually is. So that's something to look at, guys. So protect yourself. And I said, if I do this, I want to help other people also save themselves, their financial security. So that's why I'm doing this also. I really want to make sure that everybody is financially secure. So thank you for watching. Remember, go to begingold.com. And if you have any questions, you can IM me or leave a comment and I will answer you. So thank you, guys. Have a great night. Thanks for listening. I really appreciate it. Peace out.